Can fintechs really replace core banking, or will trust, compliance, and scale keep traditional players in the lead? In this live debate, top industry voices go head-to-head to explore the future of banking in Hong Kong and the wider APAC region. Leading the conversation is Lisselle Pratt, co-founder at Capital X, featured on Forbes 30 Under 30, Tech ranks 29 under 29 among the top 100 women in fintech. Please join me in giving her a warm round of applause.
Thank you so much for that lovely introduction. I really appreciate it. Hi, everyone. Thank you so much for joining us today on the panel of Built to Last or Bound to Break. Can traditional banks survive the fintech era? Well, we're going to find that out today, aren't we? And I would love for the rest of the panel to introduce themselves, because I'm sure they're all doing amazing things as well. So if we'd like to start with you.
Yes. You can start with me. So, hi everyone, I'm Leo Vaughn. I'm from VX Trade. I am the sales director at VX Trade. So, we are providing an all-in-one solution for brokers.
Hi, my name is Yoshi. I'm the CEO of the company called Alpaca. We are a brokerage infrastructure company based out of United States, and then also a self-clearing broker-dealer in the US and licensed brokers in 5 different countries.
Hello, I'm Lee Goldfarb. I'm from B2 Broker. We are a B2B white label provider, everything from technology, liquidity. We also have a crypto payments platform called B2B and Pay, and we basically allow people to open their own brokerages and scale with everything that they need to run their business.
Hi everyone, this is Chris. I'm the head of Hong Kong and Great Bay Area commercial of Oli Global. Oli Global is a joint venture between SC Ventures, part of Standard Chartered, and Link Lodges, a listed company in Hong Kong. So we're here to connect the bridge between global trade and global liquidity.
Hi everyone, my name is Pacey. I'm a wealth advisor at Stashaway. Stashaway is a Series D scale-up in the wealth management space. We're a digital wealth management platform, operates across 5 markets, including Singapore, Hong Kong, Malaysia, Thailand, and Dubai.
Amazing. Great to see you all doing very interesting things. Now, let's jump into the question of can traditional banks survive the fintech era? I'd love to know from your perspectives, and we can start off with you to begin with. The session title is ask whether banks are built to last or bound to break. From your perspective, are we witnessing the evolution of banking or its replacement?
I think we're witnessing the evolution of banking. The new generation of bank is not a replacement anymore. So bank try to get involved in new generation of digital world.
Okay, thank you. And what's your perspective on this?
Well, I think banking continue to change because the human communication continue to change, right? From the face-to-face to the web browser, phone calling to web browser and mobile first. So I think the interface of the human interaction changes. I think banking experience has to change.
Mm-hmm. Okay.
So what we see is that there's 2 really big differences between fintechs and traditional banks, although now we have the space of neobanks which kind of bridge the gap between the 2, and one is whether or not you're using legacy systems and you have that legacy balance sheet as well, versus fintechs which tend to be very agile, have very clear niches and developing to those niches. But ultimately I think it's going to be a synergy between having that balance sheet of a bank coming behind you, as is your case, and helping scale a niche that's been really well defined, presented, and utilized by a fintech. Because a fintech can move in a very agile way, but they can also bring a lot of new technology. A lot of legacy banks are using very outdated technologies.
Mm-hmm. And I just wanted to jump in there because you said a very interesting thing about traditional banks using outdated technology. And we're often seeing this as well with the rise of fintechs and also the blockchain sector coming in rapidly. How do you think this is going to impact the traditional banking payment rails, for example?
I think, so I actually have a background in deliverable effects.
Okay.
So it's something that we saw very, very clearly, where banks that don't move with the new infrastructure are just going to be at a disadvantage. Yes, they might have a very good client book and very solid, because, you know, when it comes to deliverable banking, trust is incredibly important. But, you know, you already saw it 10 years ago with the rise of digital IBANs. If you don't have a digital IBAN, your business becomes much, much harder. And once people are aware that that facility exists and your ability to essentially transact on payment rails that make you behave like a local into the market that you're in, which an emerging market is incredibly important, because there's all the regulation, there's all of the, you know, to clear a transaction, you need to present paperwork. If you have a digital IBAN, it's usually much easier because you show up as a local transaction as opposed to a foreign transaction coming in.
Absolutely.
So you need to have this modern infrastructure in place. And once a client sees, oh, I can go to a fintech and do it like this, and it's so much easier, then it becomes a real challenge. But this is only going to continue getting enhanced. Things like stable coins, you know, they were kind of lauded as a bit suspicious a number of years ago, but now transactions are up, volumes are up, inventory is up. It's becoming a player that you can't move away from. And doing it in a regulated, sensible manner is incredibly important. B2B and Pay, we indeed have that as part of the ecosystem of the B2 broker environment. But as these technologies become more used, they're going to be more demanded because they do make scale and speed available.
Yeah. Thank you for that. And what's your opinion on this?
I think I came from a banking background. I mean, started off my career, I spent about 10 years in banking before I moved to fintech. So I think I do agree with Lee that it's actually going both ways. You know, for banks, a lot of these changes, they try to incorporate a more digitized way of doing things, more like as going closer to the customer experience end, where it is actually very difficult for banks to create a subunit or a separate fully owned entity where they actually can fully commit a new ideology inside while, you know, deviating from the original banking system. And at the same time, like coming from my company Olea, we're a JV formed partly from a bank, majority owned, but then it's also JV formed by another fintech. So when we run our DNA, the thing is we can start off from scratch, like starting from customer experience, starting from the whole infrastructure. You talk about infrastructure being very outdated. That's very true. Especially, I mean, I was born and raised in Hong Kong all the way, and then I know exactly. You know, when you go to the branch, sometimes if you take a look at the screen, what people are looking at, they're looking at the Windows 32, 8-bit, that kind of screen, right? Banks find it very difficult to replace that, given the fact that there's a lot of privacy issue. They feel like, how can I actually, migrate the whole customer base to a new system without, making any problems, right? So it's very hard for banks to change it entirely. However, at the same time, when you're a fintech, you try to be nimble. You start with a very, simple mission. You're agile, as you said, very true. So I think it goes both ends. Yeah.
Thank you so much for that, Chris. And that will get me into my next question after this. But first, I'd love to hear from Paisi on your opinion on everything that we've just spoke about.
Yeah, sure. I think I also come from a banking background. I was in private banking. And I think the advantage of banks is the capital. They do have the capital to deploy. And even if they cannot innovate as fast, they can use the capital to acquire innovative companies. While the advantages of fintech is that we are more agile. The advantage is speed, is the reaction to the market. So I think both has its own advantages, and eventually, who going to respond to the customers faster, going to win the market.
I agree, and that's the thing with fintechs coming in and almost revolutionizing the whole payments and banking space, that they are quick to innovate. They're building the technology, which also, I mean, if you take a look at Revolut, for example, they started off as an EMI, and now they have banking licenses across the world. So that's a great example of how fintech is coming in and dominating the payments and banking space. So it'll be interesting to see what else happens in this space, or if traditional banks are going to step in and really take note of how quickly Revolut has innovated, for example, and implement that into their businesses. Which brings me on to my next question. So I want to ask Yoshi. Alpaca builds the tech that helps other financial firms innovate. How can banks use fintech infrastructure like yours to stay modern without completely rebuilding themselves?
I think existing banks. So we work with close to 300 financial institutions, including digital banks and incumbent banks, and leading fintechs globally. We ourselves is a very much regulated clearing firm in the U.S., Japan, and Europe. What the trend that we see is that there's two things that's happening. One is that you kind of realize that you can't fix what's running already in the incumbent old system, so you create a different brand as a digital bank, and you just start from scratch. And most of the time, it actually works better because you have better new way of the thinking people, new infrastructure, so you can do everything from scratch, and that moves faster. And I also see this the companies who are still trying to figure out this spaghetti system infrastructure, try to connect into something that's so hard to do. I don't know how long that would take. So I think that hopefully a lot of companies and most of the Asian banks are actually doing the digital banks. It will be followed by most of the banks globally as well.
Thank you so much for that, Yoshi. And coming from a European and UK financial sector myself, coming into Asia and seeing how quickly the region is to innovate with technology, especially their banks, is mind-blowing almost. And I mean, for me, it's surprising that Europe is still very behind on fintech in their banks. Why do you think that is?
I think Asia in general, I feel like it's really fast, even compared to the United States. Probably US is even slower than the Europe or UK banks. The biggest innovation that we see as a B2C company is Robinhood, which is still not a bank. It's a broker dealer now maybe become a bank, but it's not. In Europe, because it's so bad that that now you have amazing platform like Revolut and N26 and Klarna and everything, right? So, but I think Asia, I feel like maybe in my opinion, maybe history is a little bit shallower compared to European banks with the old money. Even you look at the banks in Indonesia, Malaysia, those conglomerate banks, they're probably second or third generation compared to the European old money banks that comes from hundreds of years. So maybe that creates a little bit difference of attitude towards innovation.
Love it. So in your perspective, the European banks are still very stuck in their legacy systems.
Yeah, and then I think Asia has, I guess, a little bit newer families owning the bank that may create faster decision making compared to some banks in other regions.
Fantastic. Thank you so much for that. And Chris, Olea sits between traditional finance and digital solutions. How do partnerships like yours help banks stay competitive while managing risk?
So I think one of the most important part of being a fintech or a startup is that you have to identify the problem statement in a very clear-cut way. I believe amongst the few of us here, or actually amongst most of the exhibitors here today or any participants, we are not here to try to replicate what banks have been doing. We have been finding a particular segment or particular field that we feel like we can use technology to try to zip in, right, and win the market share. So first of all, this problem statement is the very important thing is you can't actually be another bank first. I mean, that is the first thing you need to think about. The second thing is when you collaborate or be a partnership with banks, for each and every financial institution, I believe they have different problem statement, yeah? I mean, some of them, they have a very strong balance sheet, but at the same time, they can say, oh, our churning rate is so slow, and we have been figuring out how to increase our RWA, right? I mean, not the real world asset, but it's risk-weighted asset, which is the very conventional financial term, where, a lot of banks struggle to find, earn more money based on their legacy balance sheet, right? And then you go inside, figure out something, oh, if you work with us, there may be more chances you can get 100 more bips, 200 more bips, and therefore you can, work with us and get some advantage over there. So I believe the thing is, once you find what you're good at, you talk to financial institution and you think about what's in it for you, right? That is the problem statement that you need to solve for them. I think that's the most important part.
Thank you. And on to Leo. Are banks still better placed to serve businesses and older clients because of trust and scale? Or are fintechs catching up fast?
I think bank for a huge amount of transaction or liquidity, the banks, or for the enterprise grade company, the banks still to be the place to go for enterprise company because they're holding a huge amount of liquidities. But the fintech is quite catching up rapidly because they so far cheaper and better to start when you are getting the business like startup. So for me, for now, the bank is yes, but in the future, I think fintech is coming up.
Great. And Paisi, what's your opinion on this? Are banks still better placed to serve businesses and older clients because of trust and scale, or are fintechs catching up to this?
I think we see an increasing adoption trend of fintech, especially in the wealth management space, because customers are looking for optimal digital experience. I would say the banks, they still have the largest market share in the wealth management space. There is still a lot of room for fintech companies like us to grow, but we see it's increasing. One interesting data that I want to show is that people usually think only the younger generation would do wealth management using the digital wealth management platform. But in our case, actually, the average age of the customer is 39. And more interestingly, customers above the age of 40 actually represents highest percentage of our overall AUM. So as you can see, this data actually tells even the less younger generation and also the higher income group, they are also choosing fintech to manage their wealth. I think it's an interesting trend to see.
Yeah, I think that's an interesting very interesting that you said that wealthier people, high net worth individuals, are starting to choose fintech to manage their wealth. So it shows that there's a lot more trust now in using, for example, companies more adoptive to but fintech solutions. So that'll be interesting to see. And on to Lee, I'd love to know, in your role at B2B broker, how do you find the balance between innovating quickly and maintaining compliance across different markets?
So fundamentally, I think the question is first and foremost one of how do you deliver fantastic services, how do you deliver good quality service, but it's, the main thing is trust. And this goes back to what we're discussing here on banks and non-banks. As a liquidity provider, the main thing you provide and the main thing I worked in deliverable, the fintech space is very good for people who are, looking to get what might be to the traditional marketplace very marginal improvements on their service, but to them means a lot. But at the same time, you'll have lots of legacy business, and that legacy business is less sensitive to, we can cut some money here. We need that trust. When it comes to trading companies, that trust is the ability to do payouts. It's the ability that when I say that I'm a direct market access liquidity provider, that there's an actual counterparty on the other side taking part of that trade, and that if I need to do payouts, I am going to honor those payouts, and it's going to be simple and easy. There's a lot of regulation that happens on ensuring that we can facilitate this, because first and foremost, you have to do it legally, you have to do it in a way that is compliant, but it's, at the end of the day, this is all a question about trust. Whether you're a fintech or whether you're a bank, it's the trust element that decides whether or not people are going to come to you as a liquidity provider. There are many in this space. We've been around for over a decade. The trust that our customers give to us when they give up a trade is that we are going to non-prejudice that trade. That's going to be filled first in, first out, best bid and offer. And that's something that, you can have regulation, but there's still stories in the marketplace of people not treating their clients very fairly. And this is something that is very, very important, that it's the trust element when people are trading with you, that, we have access to those tier 1, tier 2 hedge funds that are going to be on the other side of that trade. And I think when it comes to this conversation of, banks versus prime liquidity providers and this kind of marketplace, there's a real benefit to aggregation, which is what we provide to people. There's a very real benefit for the fact that we know how to tailor liquidity to the underlying client. But at the end of the day, whether it's a fintech looking at wealth management or a startup, it's all a game of trust. The reason why the banks do well is because they've got those huge clients, and those huge clients aren't looking to make marginal returns on their service. They're looking for a counterparty that they can trust, that can treat them in a way that is expected, that the execution is execution that they can expect. They know what's going to happen, know they're going to be treated the correct way, and that is why people still go to banks, because at the end of the day, it's a game of trust. It's why we as a liquidity provider, we spend a lot of time with our clients. We do a lot of white labels as part of our provisioning, but also providing services to existing big names.
It's security of funds as well, isn't it? Because at the end of the day, if your clients can't trust you to take care and handle their money and make sure nothing gets stolen, then how are they going to trust? Like, how is anyone going to trust you? In finance, as you said, it's not even a game. It's essential. If companies don't trust you, they're not going to do business with you. And at the end of the day, it's managing money. If you're managing tens of millions of pounds, it's no game, right? It's security of funds, and that's part of how the industry works, and it's the cement layer on the industry, I would say. So that takes me to my next question, Chris. Since Alea operates across regions, how much do different regulations across Asia make collaboration between banks and fintechs more complicated?
Well, just to lay it out, Olea is headquartered in Singapore. We have offices in Hong Kong, in China, in Vietnam, in India, and then in Europe we have in the UK, and then in the States as well. So the thing is, whenever we're running a business of fintech, of global trade, right? That's why we have to be in different places so that we can talk to different clients as well as different financial institutions. The tricky part is, as you said, regulation. Obviously, in Hong Kong, we have the money lender with CMS, and then the money service, and then in Singapore is the MAS that's governing us. We realize that the pace of different governing body is actually very different, in a way that I would never say that there's a consensus in terms of how they want to move forward, to be very honest. And whenever we want to apply for a license, the pace that we have to manage internally, or our expectation that, or maybe when we apply for something in Singapore, in Hong Kong, is totally different. Sometimes different regulatory body, they will come back and say, oh, we only do a review every 3 months. And anything you submit earlier to us, we're not going to even reflect anything on that, right? And even if there's one missing statement, then you got to wait for 3 months, right? So some places are extremely rigid about that, whereas some places are more, flexible. So going back to the point of, it's all about, when you're a fintech, you're a startup, you don't have that much of resource internally, you don't have that much resource like legal people to actually help manage everything. So at the end of the day, as a business owner or as someone who can make decision, you have to think about and manage the expectation of your investor, right? How long do we expect to actually get this license? Is it the most important license we need to get, or is it something that is good to have, right? So it's all about prioritizing different things. And as of today, I can still say that the paces of different regulatory bodies is still something very unmanageable in a way that, especially when you're running a global business.
Yeah, absolutely. I think that that's an interesting point that you mentioned about because a lot of people think when they come to Asia that it's all going to be the same. If they're expanding into Asia, it's all going to be the same, but it's not. It's a whole different continent. Everyone has their own regulations and licensing, different legal aspects as well.
Yeah, I mean, just to add on that point, right? When it comes to Asia, there's Northeast Asia, there's Southeast Asia, and among Southeast Asia, you have so many countries over there.
Yeah.
And Northeast Asia, China, Japan, South Korea. I mean, all these different countries, they have different regulatory bodies. So it's very well reflected as it's just very different. It's not just you can say one word to cover everything.
Yeah, you can't just say, "Oh, I'm expanding into Asia" and expect it all to be the same. It's totally different. And that brings me on to my next question, Paisi, because you work closely with digital investors every day. What are younger tech-savvy clients looking for most in financial services right now?
I think no matter younger clients or older clients, tech-savvy or not, what client ultimately looking for is better products, access to high-quality institutional-grade products, better service. The service here, I mean, is not there's a counter of someone serving you. The service here means that you got high-quality advisory services from your wealth advisor, from your relationship manager. At the same time, there is a need to be transparency. And I think transparency is essential for the younger investors because they are tech-savvy. They know how to operate everything on the digital platform, on the app. So what they really need is a detailed illustration and user-friendly way of explaining the products, and also the transparency in terms of the fees that you're charging to make sure that the platform or their wealth advisor is aligned with their interests. So I think those three things are the most important things for the digital investors, and that's why it creates a market for wealth tech like us to play.
Is a younger generation these days not worrying about prediction markets in Singapore? Prediction markets, poly market and Kaushi. I mean, that's what we talk about a lot in the US. So it's not happening much in Singapore.
Well, I'm based here in Hong Kong, so our company is headquartered in Singapore. I don't see that much at the moment, but I think younger investors, like I said, at this moment they like to trade, invest in all types of different alternatives. In future, if those alternatives become like a tradable and investable asset classes, maybe we will think about adding them.
And that actually brings me on to my next question, Yoshi. So a lot of fintech technology works behind the scenes, invisible to end users. Does that make it easier or harder to build trust and brand loyalty?
I think we've been talking about fintech and banks. In my opinion, there's a very blurred line because there's a banks that has to become a fintech to innovate, and then fintechs has to be licensed as a bank to get trust. So in that sense, at the end of the day, reputation matters regardless of how you do. In reality of financial services, you never own every single piece of things by yourself. Even if you're a Goldman, you're partnering with all the bunch of other companies behind the scene to have accessibility to certain markets some way or another. So I think that concept always exists, and I think it continues to exist. If in Hong Kong, people try to do prediction markets, probably they're trying to connect with Kalshi or Poly Markets or even DraftKings, right? So I think that kind of phenomena continue to exist. So I think that's how it is, and then I think it's our job to stay as an infrastructure instead of the front end facing businesses.
Thank you very much for that, Yoshi. And on to the next decade of finance. So, Leo, looking ahead, do you think, what do you think will separate the winners from the rest? Speed, scale, adaptability, or trust?
I think the winner needs adaptability skill because every years, every decades, everything has changed in this world. So the strength, any winners who has skill to adapt, they will be able to change with the customer behavior, the new technology, the new compliance and or regulation. So I think the key is if you cannot change yourself when the world has changed, you cannot survive. So that's it.
Okay, thank you. Yeah, interesting that you said adaptability. I'm sure Lee would have something else to say on that.
So for me, it's very clear that for the next decade, if fintechs want to be able to scale, they want to get investment, they want to be able to move to the next level of partnership by getting institutional money behind them, to give that, it's all in trust. Trust is the failure point of the financial model. Once that comes into question, you can have the best product, it can be the most innovative product, it can give people real world use and real world benefit. If there's a question of trust about you sending money, them treating your orders right, that's where the model falls apart. And also, a lot of these fintechs, they start off as small startups, but they want to scale, they want to get investment, they want to grow, and they want to become maybe multi-jurisdictional. When you get to that level, it's, again, a game of trust. You need to be able to move into a new market. People need to be able to trust that name, to trust your custody, to trust your services, to trust that the contracts that they're signing with you, or the contracts they're entering into you, are the basis. And that is, at B2 Prime, we work with lots of different trading companies. Some of them are in the room. We never give out the names because we, of course, a white label provider. We sit behind the scenes and do things, but people choose us because of trust.
Yeah.
I've worked in Deliverable. I've worked in an LBMA member. You can trade gold with a non-LBMA member. Well, why do people choose an LBMA member? It's because of that trust element, and it's because that name tells you how that client is going to behave and means that you can expect certain behaviors. So for us, it's very, very clear that if the fintech want to be more than a passing fad, you need to have that trust, because that trust is going to give you legitimacy with your clients, it's going to give you legitimacy in investment, and it's going to allow your business to move from where it is today to where it wants to be in 10 years' time, which is hopefully something akin to a bank in terms of size and in terms of balance sheet.
Thank you so much for that, Lee. And you know what? I totally agree that it's about trust. I'm sure a lot of you guys, since we are in a Forex Expo, have witnessed or know of clients that have had their money been stolen by random payment service providers across the world. I've heard horror stories from just people that I've met here. That I've used someone that they met, and they've had their money go missing, and that's for me that's a very scary story, because at the end of the day, if you're dealing with millions, then it's all about security of funds. It's about complying with regulation, complying with, having the correct licensing, making sure that any provider that you go to is has that trust as well, because if you're working with them and again, if money goes missing or if it gets frozen, then that falls on you, so that could be detrimental to your business.
I think based on the asset classes, it's at a different context, right? Because if you're dealing with FX, CFD, or securities, it has a different type of the insurance. For example, because our main product is dealing with the U.S. securities,
okay,
and that of course come with the FDIC insurance and the banking SIPC insurance. So even though the parties that's licensed fail, there's government guarantee that happens, and some asset classes are not covered like that. And I think for the investors, they have to understand, okay, these asset classes are probably secured by the government, and these may not be secured by the government. And I think the explanation clearly becomes a very long way.
Yeah, thank you for that. Thank you for that. And I'd like to hear from all of you as well. We can start with you first. Do you see fintechs eventually becoming more like banks, or banks transforming to look more like fintechs?
I think they are cooperation. We work together, like where the bank will create the real for the future, and where's the fintech create a fast, high-speed train on the top of the bank, and they can work together in the same direction, in different dimension.
Okay, thank you. And your opinion, Yoshi?
I think in order for the incumbent banks, like existing banks, licensed companies, to continue to be relevant, I think there is no choice that they have to become what's so-called or look like fintech. Otherwise, they're not going to be relevant. People continue to age, and the money transfer down to the next generations who think the digital offering as the norm. So I think, in my opinion, like it's more like existing players becoming look like fintechs that we use the word of the fintech.
Okay.
I think that from a certain level, it goes either way. I see them as collaborating. Banks have the balance sheets, but they don't have a risk appetite. It's easier to find a fintech that has really good rails, really good services, a really good product, and to invest in it than it is to build it in-house, because you've got that incumbent infrastructure. Fintechs can be nimble, and the way I see it is that fintechs continue to grow, but behind the scenes, maybe the custody element, maybe the pricing is provided by banks, and you have that connection between tier one execution, but on the front end, it's a fintech. This is what the direct market access model that we use is underpinned on, is the fact that you're getting tier one execution, but you don't have to have as large of a balance sheet, because we use our balance sheet to give you the access to the market. That's what the prime of prime business model is about. So this is from the broker side of things. Definitely see that what brokers need to be is they need to be nimble, they need to be able to access those niches, but they also need to have access to that tier one execution. And that's something that we provide. We've seen businesses grow and scale and become huge and break into new asset classes as a result of this, and into new ways of servicing. But I think it's always going to be a partnership. You've got the incumbent model, which has a huge balance sheet, and to get as a fintech to there is going to take some time. So, and indeed some fintechs might not want to become a bank in their own right. They've got a really good successful model as a broker, as an exchange, and they want to continue doing what they're good at. So they're going to focus on that. So I think it's the model is going to be that fintech is where the innovation comes from. Banks adopt that innovation.
Yeah.
And I don't necessarily see that they're going to cross over and become one of the same thing. I think they're going to enjoy having a bank being like, we've got this very traditional model that we like, and then we can break into these new areas using the new infrastructure providers.
Thank you. Chris?
I think banks would never want to be in fintech, because if then many people will lose their jobs. But I mean, at least on the front end, on the customer acquisition, engagement with customer, they would try to be more like in a nimble perspective from fintech. And I don't think they want to incorporate the DNA of a bank as well, because that would actually deviate from the DNA of being a fintech, of moving fast and being agile. So has to be independently, but at the same time, trying to learn from each other.
Thank you very much. And Paisi?
In my opinion, the banks are doing self-disruption at the moment, because just like the Magnificent Seven in the tech industry is investing a lot into AI, banks are investing into AI and investing into fintech. So I'll say banks are getting more and more innovative, and fintech companies are getting the support from the banks as well.
And that's an interesting point, Paisi, because right now we're seeing a lot more banks acquiring fintech companies to implement their technology and to own their technology, because it's much easier for them to build it themselves. They just acquire the fintech companies and put it into their own platform and everything like that. So I think from my perspective, we're definitely going to be seeing a lot more of this happening. And I think it's a great way for them to collaborate as well, because at the end of the day, as we've all been discussing, fintech companies are a lot more nimble, they're a lot more agile, they're very quick to adapt. So it does make sense from a banking perspective. If we can't beat them, then we buy them, or we join them, we partner with them. And I'd love to hear, we're just on to our last few minutes now, one bold prediction for for finance or fintech? And we'll start with you, Paisi. What's one bold prediction that you can see happening by 2030 in the finance sector?
I'll say that AI might probably replace many of the relationship managers now in the banks, because now for relationship manager, that human touch is important. And if you are someone with perspective and you truly cares about client, you will never be replaced. However, if it's just providing basic transactional services, AI can do it, and AI can write an investment piece, research piece very well. So I think, yes, that will be the case in 2030.
Okay, interesting. But don't you think the personalized aspect of having a dedicated account manager is important?
It's important for high net worth investors, and someone with the investment perspective is important. But for majority of the investors, I think AI can help a lot in doing research and validating what the human suggestion is providing to you.
Okay, thank you for that. And what's your opinion on this, Chris? Not opinion, your bold prediction of 2030.
Well, I think on one particular thing I can immediately think of, maybe not 2030, but maybe 40. Maybe half of the branches, like physical bank branches, half of it globally would be gone. Maybe. Given the fact that I don't actually go to a branch anymore, not to mention the next generation, right? Wild guess.
Yeah. If my granddad was still alive, he'd be complaining about that, because he's always saying, why are there no branches anywhere these days? I can't go to the bank and do anything. So he gets very frustrated. But us young ones, we don't really need to go to the branch if we have the account manager, or if we can do it via our app. What's your opinion, or no, what's your bold prediction, Lee?
My bold prediction is that I think, social media is lauded as being not the greatest things, but actually when you see access to education, specifically for younger people, they're growing up with the ability to be literate in finance much earlier in a way that's far more sophisticated than they could. You're getting traders who come from age brackets that previously we didn't really see, and actually their level of sophistication, their ability to read the Greeks is very, very surprising for their age. So I think the bold prediction is that finance and access to finance, access to instruments, access to trading actually becomes more accessible, provided that they can find good information. But I think the fact that people can become aware of, this is how you organize your pocketbook, this is how you do your savings, this is what you can do with your savings. I think if we look 10 years ago, 20 years ago, you needed to go through a wealth manager. Now you have many more options on the table, access to advice, access to what the markets are.
For sure.
And it's changing now, and I think in 10 years' time, it's going to be a very interesting space.
Absolutely. And we're just coming up to the last minute, so we're just going to have to do this one very quickly. What's your bold prediction?
The financial operation is going to move on chain very quickly.
Interesting.
For me, I think the most profitable banks will engage with the back end user. So they're going to be like AWS for infrastructure of the world economy.
Okay. Amazing. Well, this is the end of our panel. Thank you so much to my fellow panelists for your great insights and knowledge and your expertise in the industry. If you guys want to ask any questions, we can wait over there, and you guys can come and meet us all and ask any questions that you may have. But yeah, thank you all for joining us today. I hope you found this useful, and hope you have a lovely rest of the day. Thank you.